Welcome, everyone. It's great to see a lot of familiar faces and joined by three special panelists, all of which I've worked with or traded with in some capacity or another. Let's just get right into it. I mean, Bitcoin prices have been moving quite a bit in the last 72 hours. Shiliang, what do you make of the market at this point?
I mean, Bitcoin's been great. Like, everyone's bowled up. We're in the industry, but look at the gold Bitcoin ratio for the past 4 years, and gold's outperformed Bitcoin. So,
That's true.
but I think overall bullish of the market going to the end of the year. The Fed's gonna be accommodative. There's still a bunch of DATs that haven't deployed capital yet. The SPACs, right? Those have closed, but they haven't been funded until the de-SPAC. So all that capital at some point will get funded. And November, December, there should be an onslaught of these vehicles coming online and buying more Bitcoin underneath.
Yeah, that makes sense. And you guys have a Bitcoin yield product. How do you guys think about Bitcoin, in these kind of more volatile times? Is it always just vol selling, or is it something else?
No, I think there's there's so much Bitcoin in the ecosystems. Everyone's looking for yield on Bitcoin, right? Because naturally it doesn't really have its own yield. 3, 4, 5 years ago, it was a lot tougher to generate yield in theory on Bitcoin, but now there's a very ample, robust lending market on Bitcoin. You can use Bitcoin as collateral across numerous exchanges. I was talking to a insurance firm in Bermuda the other day where they're taking Bitcoin as collateral for the so you can actually earn yield on Bitcoin via the insurance markets. So there's a lot more activity, a lot more things you can do with Bitcoin to generate yield. So yeah, it's a lot more interesting now than it used to be.
For sure. And Arthur, I guess for you, it's been much more of a discretionary environment. Altcoins have done really well, and then some of them are underperforming, some of them are overperforming. How are you guys thinking about altcoin performance in the last couple of weeks?
Yeah, I think it's continued to be a story of dispersion. I think that we are not really getting any crazy inflows like the 2021 days.
Right.
So anyone that survived, I would define them as smart money. So people are really careful going after the strong name with a lot more consensus or some new narrative that is in trend, like stablecoin chain or stablecoin sector related stuff. Yeah, I think it will continue to be a big dispersion where certain names will do very well, but I think the top 200 name will look very different in 2 years. It already looked very different compared to 2 years ago, and it look more and more different as well.
And how are you guys thinking about the positioning between those assets, right? You say that the top 200 on CoinMarketCap or CoinGecko will look different. Are you guys taking an active stance in, which ones will kind of reach the top, or is it more a pretty even dispersion?
No. I think I increasingly believe that the power law will dominate crypto as well. And in fact, I think I increasingly believe that one of my most important job is I need to be invested in the Max 7 of crypto before they are obvious as the Max 7. I think it's getting a little bit more and more obvious, but I still think there's competitor can emerge. But yeah, I think that's the most important thing. It's very power law outcome. Our portfolio concentration has got even more over the past few years as well. Like usually we love like 5 to 10 names at most of the time. Yeah.
Right. Really concentrated and really focusing on a lot. That makes a lot of sense.
I think in crypto, most of the time, if you go beyond like 20 names, you're really getting diversification.
Right. Yeah. That's a good way to put it. Jason, I noticed you smiled when he said crypto Max 7. As someone who has a background in traditional equities and and spending a lot of time now in crypto, and you guys really look for kind of esoteric ways to generate alpha. How are you thinking about the market as of late?
Well, there's not much alpha from us because we have a private portfolio that just drags the whole thing down. The entire game kind of changed, but I resonate with Arthur's point about the Max 7 because it's even true in NASDAQ. There are some companies that have open-ended upside that just rent-seek on the world and are on the right side of history that just keeps on making more and more free cash flow with almost infinite growth.
Right.
In crypto, it's kind of the same. You have the haves and have-nots. The have-nots, they don't have the open-ended upside. They are not really capturing value. Sometimes they don't even speak really good English, so they can't really tap into the liquid investor base that is mostly English speaking. And then you have the haves that are, on stage here, probably. They are bucking the right trend, which kind of people are starting to agree on, which is stablecoin exchanges and token launching and token trading spot maybe. And you can kind of paint a picture that the penetration rate of crypto is going to magnificently increase under a Trump and SEC regime.
Right.
So once you underwrite the bull case and you give them some reasonable multiple in a couple years, you can get to a very big upside with significant value capture back in your token. And those companies that check all those boxes, those are the things that I think a lot of liquid managers, including ourselves, buy. And because there's not yet a linkage between traditional equities and those assets yet, they don't get pushed up the way that Bitcoin does, and they kind of come out at a somewhat reasonable valuation, which is why kind of everybody owns them.
Do you find that, I don't remember the last time we shared a stage, if it's years ago maybe, do you find that there's been a larger trend now where we've gone from an industry where there's a lot of different pockets of interest to now one where people are really concentrating around, like you said, stablecoins, exchanges, maybe token launching, platforms, these types of things. Do you find that that causes more of a friction for the TAM of crypto, or is it more now that people can refine their point of view in terms of making an investment decision across a few of these?
Well, I think people figure out that nothing else worked. Like the
Right.
token, they launch tokens, they create projects, and then they just never made revenue, and it just dumped. And then every VC that did those tracks get burned. And then there are certain sectors that just kind of worked, and it kept working, so that's where capital aggregates to. I think we're at the stage where people kind of figure out what crypto is good for.
Right.
And because of regulatory blessing, what crypto is good for could be a hell of a lot bigger, taking meaningful share. And that upside drive more capital into it.
Yeah,
So-
Arthur, what do you think about this?
Yeah.
Yeah, I think the term I like to use is to be a skeptical optimist on this. I've been saying that finance is the biggest product market fit of blockchain and crypto because you have the digital money. You do need a decentralized financial system to support it. So look at all the most profitable and the biggest use cases beside layer 1 is all finance related, right? Speculation, trading, lending, borrowing, stable coins. But something that a lot of people wrote off years ago, which is prediction market, suddenly come back to life. Remember in the Ethereum white paper, prediction market was mentioned as one of the main use case that smart
Right.
contract blockchain can enable. And Augur was one of the earliest ICO, and everyone was super excited about it. And then boom, 3 years, 4 years, everyone gave up. Said, okay, prediction market is just like a too idealistic of a dream. It's not gonna happen.
Right.
Until a founders that managed to solve it, continuously push through it. And then right now I think prediction market is one of the most exciting sector that most VCs are looking at right now. So I think most of the case you should be extremely skeptical. I think that blockchain is a very good narrow tech, so finance is still the best use cases. But yeah, prediction market kind of prove most of our skeptic like us wrong. And I hope that we see more of these applications to prove me wrong as well. Yeah.
Would you guys think, I guess, on average, yes or no, that there are probably 5 verticals of crypto, maybe, I'm just coming up with a number here, that matter to you in general? Is that a yes, can we say that that's probably a ballpark correct answer?
At this point, probably.
Shiliang?
Yeah, probably.
Yeah. Sounds about right.
Yeah. Agree. Yeah.
And so when you make these, kind of bets in each one of these categories, right? We named a few of them, stablecoin exchanges, whatever. How do you think about, if Project A comes out?
Let's before that.
Sure. Let's get
a consensus. What do you guys think about crypto AI? I don't think we have talked about that yet.
I wanted to get into the more esoteric stuff, but because you asked the question, I would say that from my point of view, as also an asset allocator, crypto AI has been one of those things where it's a little bit too elusive in my hands, but I'm also much more of a finance person than I am a, technologist, if you want to call it that, right? But Shiliang, Jason, I don't know what you guys think.
Yeah, I think on average, it's got the right narratives, right? So I think as a trader, I think there's a lot of money potentially to be made from it. Fundamentally, I haven't really seen the linkage between the actual use cases between AI and actual crypto, other than certain narratives that I don't think are necessarily value accruing. So I'm more of a skeptic, but I do think there are trades to be structured that can make money.
I haven't found anything in the public market yet that I want to size into. I think it would be really interesting, but nothing I can buy yet.
Arthur, what do you think?
I'm torn. I'm not sure if as the LLM get more powerful, you really want to give them so much data.
Right.
So I do see the appeal for a decentralized LLM, and you get more embedded privacy onto this. But in terms of product experience, they can't really keep up. So as a result, I think that you get a very power law where people just opt for convenience and use the centralized LLM, and the decentralized LLM with privacy inbuilt. They're not really getting enough adoption. But actually, I would hope that they get more adoption. Actually.
Yeah, I think that makes a lot of sense. I guess going back to the last kind of topic at hand, what do you think about when you're making an investment in a specific vertical, call it stablecoins or exchanges? Oftentimes, it is a winner takes most market, and most of these companies will have to aggregate into the same kind of product feature, right? So if you have a company that's focused on, let's just say, like stablecoin yield, then all of a sudden they're going to want to become their own L1. They're going to want to build a DEX. They want to, how do you guys think about backing, kind of competitors, if that makes sense, or if you feel that you want to go all in on one project versus, diversifying the portfolio? Start with Jason.
I think in the case of all of these things, I think they will go through phases where you have competitors coming in, throwing dollars at marketing, and dangling the airdrop carrot to drive growth. In that lane, it probably really comes down to the touch points of tapping into liquidity, like how wide of a distribution the liquidity can get, as well as just the user experience and retention of the users that are actually on the platform. So my view is kind of these things come in phases, and the time to actually buy the potential winner, that's something that excels in both facets, is when you have competition that drive away market share, but the overall marketing dollars actually make this entire space gain share. And hopefully, all of those dollars flow back to the leader once those incentives run out. So actually, it will be a pretty good place to buy the leader. Stablecoin, I haven't spent enough time yet, so I really don't know. I know you like Plasma, so I'm curious to hear a few.
Yeah, Shiliang, what do you think about this?
We don't personally invest in venture, right? I personally do, but not from the fund level. I guess we approach it more from an actual usage perspective, right? Like, as the ecosystem gets built out, as apps come out, there are ways for us to participate as a liquid fund, whether it's market making or trading or providing liquidity. We can get exposure to the specific projects and overall ecosystem through incentives, airdrops, et cetera. So that's how historically we've chosen to participate. And even though we might not necessarily be contributing hard dollars, we are contributing a lot of resources and time to engage with these projects and build into it. So we like to think that at a later stage, as the L1 comes out, as we can get a clear picture of the different participants and the usage cases, we can make a bigger bet of our resources and time into specific applications within these ecosystems, and also de-risk us because we're not necessarily putting dollars, right? It's more just time and effort.
And Arthur, how do you think about this? Do you guys place a lot of conviction behind a singular bet, or is it more diversified between each one of these sectors?
No, I think we generally really pick the best project inside the sector we like to invest in, because as I mentioned, I believe in the power law outcome. Right. So yeah, if you bet on a winner, they're just going to win so much. Let's talk about, for example, the stablecoin sector. Obviously, we have the two behemoths, which is Tether and Circle. Right. And the only other stablecoin that managed to break 10 billion supply is Ethena. Right. No one else is close. Even PayPal, which obviously is, they've done a good job so far, but it's like 1 to 2 billion in supply. Right. And Ethena is getting close to 15 billion right now. And they have more than doubled their supply year to date. Right. Yeah, that's kind of the insane growth rate they are exhibiting. And, look at everyone, it's super far behind. And Hyperliquid have, 80 to 90% market share of the perp DEX space. Yeah. What else? Other sector. And even Aave, lending borrowing. I think Aave have 60 to 70% of the total lending borrowing market share. Then, obviously sometimes you do see some competitor emerging to tackle it. That's why they pay us the fees to pay attention to all this thing. If there's a competitor emerge, we will be there to ready and reposition accordingly. Right. But most of the time, I think that the power law outcome are just so great that, and I think the founder quality still drive a lot of these outcomes. And it's going to matter, the difference they're going to create is actually not 2x, 5x. It's more like 100x or even 1,000x difference in outcome. So yeah, founder qualities matters a lot, and I think this is something that's still very hard to replicate. Yep.
Right, right. I guess, to your point, I look at the venture market a lot lately and think there's a lot of distortion between valuations, and then the number one determinant of how high of a valuation something gets is more or less the breed and quality of a founder. So that makes a lot of sense to me. I guess maybe switching gears a bit, I scroll the timeline these days on Twitter, and I see people are just in agony constantly, right? People are constantly complaining about prices being down or losing money or this or that or whatever. And then you look at asset prices, and returns year to date or year over year, and you're like, these prices have been vertical nonstop, right? What do you think explains the majority of the dismay of the market, as of late? Maybe it's just a crypto Twitter thing, but still.
Yeah, I mean, I think go ahead. Well, I think one is a couple of things. One is most liquid directional funds have been able to outperform Bitcoin, right? Like we've had a couple of cycles now. It's been very difficult for directional funds to outperform Bitcoin. That's a fact, right? I mean, most coins in general have underperformed Bitcoin over multiple cycles. And a lot of the funds originally were raised to not have exposure to Bitcoin because they don't want to just buy Bitcoin. And so over multiple cycles, they've underperformed, and that's been difficult. The second piece, I think, is this cycle specifically, there's been less just, you can't just blindly buy everything and have the beta of the overall market carry you higher like previous cycles. There's just been so many tokens, and there's not enough capital to support all of it, right? And a ton of new projects coming to market, the vesting is hitting the cliff, and there's constant supply. So it's been more difficult this cycle versus previous cycles in terms of just getting overall beta lift, right? And at the end of the day, you look back at the past couple of year to 2 years, there's been a few narratives where if you missed it, you completely missed the returns in the market, right? If you didn't invest in meme coins as a directional fund, you kind of miss a huge chunk of returns last year, right? And if you miss specific projects, in this year, that contributes to the whole return of the directional market. So I think it's been a much more difficult market. It's the signs of a maturing market, and that's why you're seeing a lot of more of the traders be remiss on Twitter, right? So
yeah, Jason, what do you think?
I largely agree with Shiliang. I thought, the incremental capital that came in are either the DATs that are just buying your Bitcoin. Actually, if you held Bitcoin, you did very well. If you're not levered long and getting liquidated,
right?
If either you hold the core of the core asset that just get liquid flow, or the other side of an incremental asset that comes in are really more TradFi. They are really kind of doing the work, and they're and a lot of them are quite sharp. That they really seize those opportunities at the get-go. It doesn't leave all that much for a typical retail to capture. Hyperliquid, when it launched, airdrops get dumped, but a lot of really smart liquid funds I know are just bidding in size, and it took 24 hours for it to go from 5 to 15. And when you have sharks like that in the market, and if you're a retail that's lever long stuff with no superior information, or if you buy your favorite alt, kind of hoping that it's going to be an alt season in the last cycle, chances are, it's not going to outperform what's out there. Yeah. So,
what would you think?
I think it's really the story of dispersion, because even if you look at the year-to-date returns, Bitcoin, ETH, the majors done quite okay, and a lot of the assets are still down more than 20% year-to-date.
Right.
20 to 40%, some of the OG coins that Tezos and stuff.
Yeah.
But yet there's also a pocket of, I would say, irrationality that still exists, World Liberty-Fi, was a massive outcome that most people did not expect as well. The ICO was not filled for a very long time.
Yeah,
months, right? Until the election and everything. Right. And also I think that I'm not trying to put any judgment on it, but the proliferation of meme coin launchpad definitely, make the whole site of this, the crypto Twitter, all this thing, a lot more short term.
Yeah.
I think the terminology matters, and people are just so used to the terminology of rug pull, exit liquidity.
Right.
I would suggest all of us to stop using this term. let's use something more positive so that people don't get too, all the newcomers come in and they don't see all this kind of terms being thrown. I think we all make fun of it and we kind of it's a self-deprecating joke.
Right.
But when all the newcomers come in, they're like, oh, what is happening here?
Yeah, it's negative.
So I think that the meme coin, all this extreme outcome, the launch like probably less than 20 coin of graduated from Pump Fund is like above like 10 million market cap, something around that number. So I think this dispersion is really creating that level of cognitive dissonance. And most people just do not own enough Bitcoin. I think that if you have a core Bitcoin portfolio, you will at least feel quite at peace. Yeah.
Right. I guess it's a really good point, right? Which is between Pump Fund, right, where you have, there's a headline that comes out and there's 16 coins of the same ticker for whatever, something horrific happens, someone just makes a Pump Fund meme coin on one end, which is still liquidity in the ecosystem, and then on the other end you have hyper institutions bidding Bitcoin that don't even think about anything outside of Bitcoin within the crypto.
Yeah. They're buying. You can see in Plasma, they're clearly bidding things that are just working, and but they're not buying your shitcoin.
Right. For sure.
And also, I kind of think it's interesting that if you take an extremely long-term view, it works very well.
Yes.
Or you take an extremely short-term view.
Right.
I'm always surprised by all the on-chain what kind of time frame they're trading at. They're literally trading at a minute's time frame. Oh, I'm out 2 hours later. We are always, we are in the kind of middle time frame. I kind of think that we are in the middle of nowhere right now.
Right. No, I think that makes a lot of sense. It's also kind of funny because it's like when we think about, as you're saying, Jason, right? Like these new launches that come out, right? We're now getting to this point where every day I check like Coin Listing or one of these like Telegram chats or whatever, and there's like 3 new token launches that happen. I typically view this as one of those end of cycle, late cycle kind of phenomenons where like exchange listings just ramp up an insane amount and it draws liquidity away. Do you guys have any view on these types of things, Shiliang?
Yeah, I think that, and also just the proliferation of like multiple DATs, right? Like it's kind of the same phenomenon. Like there's only so much capital in the world that can support these assets. I think DATs have brought in a lot new capital, but when you have like the 20th Ethereum DAT or like the 10th Solana DAT or like multiple like altcoin DATs, there's like not enough capital to support all of that, right? And
what happens next year?
Yeah. And so the same thing.
No,
with
what happens next year? Do you think they will still trade at a premium, and do they still?
No, a lot of them are actually trading at a discount now, right? And so I think most of them will continue to trade at a discount. I think there'll be a lot of consolidation within the DAT space, and there's already DATs, as I mentioned earlier, that are being raised to do roll-ups of DATs now, right? So like, everyone sees the writing on the wall.
For context, just DATs are the digital asset treasuries, or these public vehicles that people use to accumulate Bitcoin, altcoins, whatever. Sorry.
Yeah. So I think people understand it, like they see the writing on the wall. Like this is not a new phenomenon. Like it's existed in other forms in previously, and so we all know what the end game looks like. There's going to be consolidation, but there is going to be winner take all. Like a power law, right? I think like certain DATs have done very, very well. There's going to be a winner in each category, but most of the DATs probably will not survive ultimately, right?
There's something funny and ironic about us being on the stage here when like Tom Lee I think was on stage here yesterday talking about Bitminer. So interesting juxtaposition, but I think that's also what it takes, right? Tom Lee did more for Ethereum in 3 months than like almost anyone else could have, right?
Yep.
So you do need that kind of evangelist or someone to understand the space. I feel like in the case of Ethereum in particular, you had this really long lull of like, oh, what is Ethereum, right? Like people understand Bitcoin that aren't in crypto. Nobody understood Ethereum before this, like digital oil, this and that. It's like none of it stuck until Tom Lee kind of came around and bridged that gap. I guess, Arthur, how do you think about this? How do you think about this listing ramp up period that's kind of happening the last couple of weeks?
I think it's just really due to the fact that there's a few one that did quite well. So the exchanges, the founders all think, oh yeah, market is receptive to new launches. Let's launch it right now. Because I think that you can't have a very choppy condition in the past few weeks, but that did not prevent some of the new launches from doing well. So people think, oh, if market going down are still not affecting the new launches, what are you waiting for? And the backlog has been building up in a massive
Right.
way for the TG and the new launch. So I think it's perfectly normal. And I don't know, probably like, Shiliang, you're more active on the market making side. Do you think that, the liquidity can be supported, or like you think it's just tough at this pace? I mean, I think that there's still some interesting projects still going to do well, so I'm a bit more ambivalent on that part.
Fair.
But I think one part actually we should talk about, I think it's quite a good contrast, is I think probably two of us are the more crypto native side, since like we're a bit younger-ish, and with like Shiliang and Jason have a lot more traditional finance experience. And this is year, what I see is that people who make the most money this year are people who actually spend fair amount of time in the traditional finance space and then done crypto for a while.
Right.
Do you think that will continue and the TradFi takeover will start, or do you think crypto native will still retain their ages? Yeah.
I think it's both, right? I think there's going to be two ways to make money. Personally, I think if you have like the way of mainstream normative crypto will be that of TradFi. Like Bitcoin is a TradFi asset now. It's an institutional asset, right? It's no longer a crypto asset. It trades on Binance.com, OKX, whatever, but it's not, it is much more of a TradFi bid than it is a crypto native bid. And then you'll see pockets of whales moving capital, this and that, but few and far in between. And then on the other end of it, it's like, we have like people that are building like the most novel tech in crypto that will need, native eyes on it, if that makes sense. But I think the problem is if you're jack of all trades in these two camps, you're just going to lose in both. That's my view. Jason, I don't know what you think.
I think, yeah, probably. I thought, what's the best way to put it? I think the incremental capital will come from folks who allocated capital in TradFi before.
Large pockets of cash.
Large pockets. And it will come through either public vehicles or it will come through allocation to funds who size into the space. And those guys know there's a framework at which they allocate, in which case, in this asset class, right now there are maybe like 10 to 15 assets that they can reasonably buy. And even then they have to make some play belief about, oh, these are actually kind of equity because they're doing buybacks. I think as long as a project falls into that category that appeals to that traditional finance framework, those tokens will probably do well, assuming the growth actually accelerates. But for everything else, you probably have to either do crime or you're so good at memeing.
Not actual crime.
Well,
maybe.
And those would be what crypto native kind of really do well on. But the TradFi guys will not catch those.
Yeah, Arthur, you want to?
But I think one thing, just because I want to talk about this, is like last time when the TradFi came in, they really invested in all the wrong stuff, right?
Right.
And it got so bad that certain sovereign wealth fund decided to not do any direct investment in crypto anymore.
Right.
And certain endowment fund of certain countries also decided to fully exit any crypto investment because they did all the late stage stuff that the hit rate just wasn't great at all. But this time I feel it's a little bit different. I feel that some of these TradFi, they are investing in the right names, and actually they did make money in a real way. Like I'm seeing more and more, obviously BitMine is the best example, but even you look at some of these late stage stuff, I think it's getting better and better. So I think this is a pretty interesting contrast, but do you think they will still make the same mistake again, or like they gotten a lot smarter, they're like only gonna touch the good stuff? But yet there's two examples recently, the most recent two IPO, which I honestly think is not that great, but it's still fully oversubscribed, and then it popped on the IPO. So,
Yeah.
I think like this, like one big question, like this regime, like what do we want to call it? It's, deregulation, regulatory clarity. One big question is this regime does open the floodgates for immense competition, right? Like now everyone is able to do everything, right? Like Robinhood is listing all assets, they're coming on chain. The worlds are really converging, right? And so the big question is like, who ultimately wins in that experience, right? Is it going to be Coinbase backing into TradFi assets? Is it going to be Robinhood, backing into crypto, right? Like the case can be made for Robinhood because they already list like all these assets. They already have the distribution, all the retail that aren't in crypto that are trading these TradFi assets, and now they can easily list crypto, and you have this overall arching like portfolio, right? And so I think that's a big question. Yeah.
I think to that point, right? Like Polymarket and Kalshi are probably two examples of this, where it's like people like these are way, way, way higher vals than I would have expected. I'm personally pretty bearish on prediction markets relative at their current valuations, only because I think like it's much easier for an exchange to roll out this product and have the liquidity centralized in one venue than it is for Kalshi or Polymarket to go into perps trading or whatever else. But I guess that's also one of those things where it's like everyone is fighting for everything all at once, right? We see this on the protocol side, right? Hyperliquid launching their own stablecoin, having the DEX, having the L1, doing all of the most value accretive kind of businesses in one go. Before we wrap up, I want to ask a few questions on some more spicy things. One in particular is just, we have two big launches coming up pretty soon, which is Mega ETH and Monad. What is your sentiment as asset allocators to these two? Right, these have been very hyped projects for a long period of time. Monad in particular has raised a lot of venture funding. Are you guys optimistic as liquid market participants? Because end of day, we talk about venture, and venture's good as insofar as they can provide value. But you guys are the ones that are bidding these tokens, if no one else, right? So, Jason, we'll start with you. What do you think about Mega ETH and Monad and their TGEs?
Well, we privately invested in Mega ETH, so I'm very bullish Mega ETH. Okay, I have to say
disclaimer: he's an investor.
Very bullish. I don't know. The layer 1, layer 2 premium in the market has just degraded over time. Like if you get no usage, you're a ghost town. You're just slowly going to zero. And then the application that loop in layer 1, layer 2s, and if they can tell a really good fee and growth story, they've done pretty well.
Right.
So I think I can't comment on Monad. We will likely not bid that. But for Mega ETH, I think it really comes down to them, showing traction with protocol-based fees coming from real applications.
But do you think like a Monad TGE would be an optimistic, future for the protocol, or do you think it's kind of DOA?
I have no idea, but I won't buy it.
Shiliang?
Well, I'm an investor in Monad personally. So
another disclaimer.
I think it depends on the time frame, right? Like I think people are launching because of the times, right? It's a good time to TGE. Like it's the right timing in terms of the market. There's a lot of attention. It is at the end of the day attention economy, and so I think it's the right time. And in terms of like, will it immediately perform well? I mean, probably not as much, right? I think like most of these launches, for the most year, other than a few, have like struggled. But I think over the long term, they have the opportunity. They have an immense amount of capital, the right teams, the right like roadmap and vision. That if you think of it over like a longer time horizon, I think they have like a lot of potential to do well.
Arthur?
Yeah, so I mean, I'm also a personal investor in Mega Monad, so disclaimer. But I think they'll just do okay. I mean, the fair value range, the market maker will price it based on the last round. They'll coordinate with the exchanges, the project. So unless there's too much selling pressure, it's not gonna come down that much, right? I mean, even some of the projects that have kind of forgotten, they still trade at 1 to 2 billion FDV. So how bad can these get, right? Yeah. So
we never want to ask that question in crypto, but I get what you're saying.
So I think they'll do fine, but the competition just started right after you TG,
right?
And that's where you are ready to set yourself up for massive expectation and also for disappointment. So I think that the key point is how well can they execute within the next 1 year post TG. That was the golden period, because if you don't do well, people move on very, very fast. I think people underestimate how fast, how short term it is when it comes to evaluating it. Like if you don't deliver anything substantial in 1 year, people really forget you and move on. So I think that TG is just the beginning. I don't think it matters. I mean, you can launch low or you can launch high, but your subsequent execution are what that matters. Yeah.
Yeah, I mean, just for clarity, I'm also an investor in both in some capacity or another. But
everyone's an investor.
No, but I want to caveat one thing, which is like, this was a long time ago. Both of these fundraising rounds that happened for Mega ETH and Monad, in a sense, and I'm no longer a believer in general purpose blockchains winning for new ones that are coming out, only because the incumbency is so difficult for existing ones that have a lot of network effects that already exist, or they already have a lot of liquidity, right? Like getting billions of dollars of liquidity on the chain and usable, and people actually need to use it for something, is a very difficult thing. Solana has cracked this, Ethereum's cracked this, and Tron has cracked this pretty well. I think almost every other blockchain, has not been able to get to that point. So, how do you guys view the kind of race for these general purpose blockchains? And, does it still seem like an interesting meta in 3 years' time, or is this kind of the end of this cycle for general purpose blockchains?
Can we just say quickly? I think that they will start as a general purpose blockchain, but in the end, those successful ones will found a few core product market fit. Like Solana is really speculation, pump fund, meme coins, and some decent DeFi activities, right? If you take away these two, the other activity is a little bit weak, yeah.
Shiliang?
I agree with Arthur.
Yeah, I agree.
Yeah.
So you guys are ambivalent on
No, I think that they will need to become a specialized chain, not by the initial design, but they will converge there to become successful.
But I think the problem is for a lot of these, and we're over time here, but and this will be the last thing. I think a lot of the problem that I see for these projects is they've built the infrastructure, right? They've set the foundation for these chains and for what they want to build, but they're not the ones building out their own ecosystem in a sense, right? Which you start running into friction because GTE is a very good example of this on Mega ETH, right? Where it's like you had this ecosystem that you wanted to develop, but because you didn't build it yourself, there's no loyalty, right? Any EVM chain any EVM protocol can port over to any other chain. And we've seen this happen time and time again, right? Where people did this with Solana, Tsui, and Aptos, right? So how do you guys think about that, I guess, as a closing thought?
They choose what's best for them, I think. The ecosystem has to have the infra to support the projects, and if they don't, then they figure they can do something else, they go do it. I think it's very mercenary.
Yeah, I mean, we're a liquid fund where our capital is extremely mercenary, right? We're only going to engage with the projects we believe in. I mean, I'm not even going to pretend anymore. So like, yeah, I mean, you see it in terms of like users and yield farmers and traders, like, yeah.
Yeah, I mean, which is why most of our investment is on the application layer. I think that the layer 1, layer 2 premium will come down, and yeah, you should be investing in the apps. Yeah.
Arthur, Shiliang, Jason, thank you so much for your time. Thank you all for listening in.